Ross Givens claims he found an AI stock that costs only $3 and has the potential to grow 7,500%. But as usual, he's trying to sell you a nearly $2,000 newsletter before revealing any details. That's a pretty steep price for a stock tip, especially when you consider that Givens's track record in finance is still relatively short. What's even more frustrating is the fact that Ross Givens likes to market himself as a Wall Street legend in his promotions, even though he's only spent 3 years as a broker and never even worked on Wall Street. I have good news. Givens left a lot of clues in his stock teaser, and in this video, I'll reveal the name of the stock for free. If you appreciate me saving you a lot of time and money, make sure you hit that subscribe button. Before diving into the teaser, it's useful to know a bit about Ross Givens and his background. Understanding his past experience can help us determine whether he's someone worth paying attention to. A deep dive into his FINRA history reveals that Ross Givens has only spent 3 years as a broker and never actually worked on Wall Street. Despite this, Givens has made bold statements referring to himself as Wall Street's top sniper and claiming he left the industry to assist the little guy. Unfortunately, his stock picks in 2022 didn't fare well, with only 3 out of 12 trades turning a profit. But is this time any different? Let's talk about his recent stock teaser. The presentation starts with an important disclaimer. It was recorded in February 2024, and the stock Givens is talking about has already doubled in value since then. But Givens insists there's still massive upside potential, claiming the stock could soar as much as 7,500%. Then, he takes a moment to hype up the AI sector, positioning it as a hot area with limitless growth. Despite his relatively brief time in finance, having worked only a few years at JP Morgan in Dallas, Givens once again shamelessly boasts about his past experience, calling himself a Wall Street expert. He then shifts focus to a graph of insider buying that, according to Givens, triggered a 260% surge in the stock price. Based on this information, we can narrow down the company he's referring to. It turns out the stock Givens was teasing is SoundHound AI, a company specializing in voice-enabled AI and conversational intelligence technology. The company's platform is used across a variety of industries, including automotive, customer service, and virtual assistants, helping to create more intuitive user experiences. Notably, SoundHound's technology powers applications for major brands like Hyundai and Mercedes, who leverage its capabilities to enhance customer interactions. As the demand for AI solutions in these industries continues to grow, SoundHound is well positioned to capitalize on a rapidly expanding market. Now let's explore some of the potential pros and cons of investing in SoundHound AI. Investing in SoundHound AI offers significant potential due to the fast-growing voice-enabled AI market. The company is benefiting from increasing demand in sectors like automotive, hospitality, and retail, all of which are adopting voice AI technology to improve customer experiences. Additionally, SoundHound has secured partnerships with well-established brands like Hyundai and Mercedes, which not only boosts its credibility, but also provides valuable opportunities for future expansion. These factors suggest the company could experience substantial growth in the years ahead. However, there are several risks for potential investors. Despite its growing revenue, SoundHound remains unprofitable, with substantial spending on research and development that, while fostering innovation, is currently eating into the company's bottom line. To be fair, this isn't uncommon for high-tech startups, which are mostly focused on growth and capturing market share. Profitability with these types of companies is a long game, but when it finally happens, investors can make boatloads of cash. However, SoundHound faces fierce competition from industry giants like Google and Amazon, which have far greater resources and established platforms in the voice AI space. So unfortunately, capturing market share doesn't seem likely for SoundHound. Finally, investing in SoundHound is considered high risk, as the company is still in the early stages of monetizing its technology and depends on speculative growth strategies. While the rewards could be significant, the uncertainties surrounding its future growth and market position mean that investors should be prepared for a high-risk investment. Now let's compare SoundHound to a company like BW Offshore. I'd be willing to bet that you've never even heard of this company before, let alone invested in it. But that's a good thing because, as they say in investing, if everyone's talking about the opportunity, it's too late. Instead of investing in a high-risk tech startup like SoundHound, sophisticated long-term investors prefer more stable companies that solve fundamental problems. BW Offshore could be a great long-term investment, especially with its unique position in the offshore oil and gas industry. The company owns a fleet of FPSO ships, floating facilities that process oil and gas directly at sea. With a price-to-earnings ratio of just 3.8 times and an impressive dividend yield of 9%, it's currently undervalued even though it's still down about 80% from its peak in 2011. What makes BW Offshore especially interesting is that many investors overlook the essential role these FPSOs play in offshore oil and gas production. You can drill all the wells you want, but unless there's a way to process the oil and gas, those wells won't produce any value. While some offshore projects can rely on undersea pipelines, many of the new high-potential offshore developments in places like Guyana, Brazil, and Namibia are in deep water. For these, FPSOs are essential. Given this growing demand for FPSOs in key offshore regions, BW Offshore is positioned to benefit from these long-term trends. With strong fundamentals, a low valuation, and a solid dividend yield, it could be a smart choice for long-term investors looking for exposure to the oil and gas industry. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.